Welcome to the Deep Dive. Our mission, well, it's simple. We take a whole stack of information reports, news, you name it, pull out the crucial bits, and help you get up to speed fast. We cut through the noise for you.
And today we're really digging into the Kenyan financial and business scene. We've got a bunch of recent reports, news updates you've sent over, and we're going to unpack what they're telling us about the pulse of the market right now.
Exactly. We'll look at the latest numbers, try to figure out, what's actually driving the ups and downs, get a sense of the bigger economic picture in Kenya, and also touch on those key business stories that are making waves.
Yeah, amidst all the global shifts and local news, what's the real story? Let's jump in.
Okay, let's start with the Kenyan equities market, that daily snapshot from May 26th.
Right. So looking at just that one day, equity turnover saw a pretty significant jump.
Yeah, I saw that nearly 50% higher than the day before. Came in around KES 392 million. That's quite a bit of activity.
It is, yeah. But interestingly, even with that higher trading volume, the overall market cap actually dipped slightly, about 1.2%, closing just over the KES 2 trillion mark.
Okay. And we saw that reflected in the main indices too, didn't we? The NSE, the all-share index, that was down 1.2%.
Correct. And the NSE 10, NSE 20, NSE 25, they all followed suit. So definitely a sort of bearish feel to the market overall for that specific day.
And who was doing the trading? Mostly locals?
Mostly, yes.
Yeah.
The mix was about 65% local investors, 35% foreign. But the foreign flows on that particular day were quite something.
Oh, yeah. What happened there?
Well, there were actually net buyers, pulled in KES 49.93 million. Now, the source highlights this as a huge surge, like over 12,000% up from the previous session where they'd been net sellers.
Wow. Okay. That is a massive turnaround day on day. So where was all that money going? Safaricom, I assume.
You guessed it. Safaricom was way out in front. Over KES 211 million turnover just for Safaricom. East African Breweries and Stanbic Holdings were next, but quite a way behind.
Right. And looking at what actually moved the NSE index that day, the sources mention losses in some big names really weighed it down.
Yeah, exactly. They point to Big Kenya, which dropped over 11%, Diamond Trust Bank down more than 10%, and Equity Bank was also mentioned as contributing to that downward pressure on the index.
Interesting. It's worth noting, like you said, the source says equity contributed negatively. Even if maybe other tables show slightly different price moves, we're reporting what the source cited as the index driver. So what stocks were pushing back against that trend? Any positive movers?
There are a few, yeah. NCBA Group had a good day, up 3.4%. Stanbic Holdings gained 1.5%. East African Breweries was up nearly 1%. And ABSA Bank also saw a gain of about 0.8%.
Okay. And the absolute top movers, just by percentage. Who were the biggest winners on the day?
Top gainers list had Samir Africa jumping a full 10%. Express Kenya was close behind at 9.6% up. Then you had NCBA, HF Group, and Crown Paints also posting decent gains.
And the flip side, the biggest losers.
Bat Kenya and Diamond Trust Bank led the pack there. Those double-digit drops we mentioned. Standard Group wasn't far behind, down nearly 10%. And Egan's Plec and Home Africa both fell about 3%.
Okay, let's circle back quickly to that foreign activity on the 26th. You said they were net buyers overall. Where were they concentrating their buying?
The data shows they were really piling into Safaricom over KES 101 million in foreign buys there. Stanbic Holdings and Kenya Power also saw pretty significant foreign buying interest.
But wait, didn't you say Safaricom and Stanbic were also among the most traded overall? Were foreigners selling them too?
Good catch. Yes, they were. Safaricom also saw substantial foreign sales over KES 37 million worth. And Stanbic had over KES 35 million in foreign sales. East African Breweries and Equity Group are also on the foreign sell list.
So lots of two-way action from foreigners in those big counters then, buying and selling.
Exactly. Active trading, moving money around in those key names.
Okay, that paints the picture for the single day. Now let's zoom out. How did the whole week ending May 26th look? What was the overall vibe?
The overall sentiment for the week stayed, kind of bearish. The NSE index actually dipped slightly over the week, down 0.3%, closing below 134 points.
And trading activity overall, did that pick up or slow down compared to the week before?
It slowed down quite a bit. Weekly turnover dropped by 47%, down to about KES 1.7 billion from over 3.2 billion the previous week. Much quieter.
And the participation mix for the week? Still mostly locals.
Even more so, actually. Domestic investors really dominated the week, accounting for over 2/3 of the activity, 67.3% participation. Foreign participation was down to 32.7%.
So that big surge in foreign buying we saw on Friday didn't carry through the whole week.
Nope, quite the opposite when you look at the net figure for the week. Foreign flows ended up as a net outflow of KES 2.62 million. That's a complete flip from the previous week where they brought in over KES 246 million.
Right. So summing up the week, quieter trading, slightly bearish overall, dominated by local investors, and foreigners actually pulled a small amount of money out on a net basis.
That's a good summary. Looking at the most traded stocks for the whole week, Safaricom was still number one, easily. KES 380 million turnover there. Equity Group and Co-op Bank were the next most active over the 5 days.
And where did the net foreign money flow over the week? Which stocks did they favor or avoid?
On the buy side, net, foreigners were definitely bullish on Safaricom. Net buys of over KES 210 million there. Jubilee Holdings and Equity Group also saw decent net foreign inflows for the week.
Okay, and the ones they were selling? Net.
The most bearish sentiment from foreigners, based on net sales, was directed at KCB Group. They saw net foreign outflows of over KES 133 million. East African breweries and the ABSA Gold ETF were also significant net sales for foreigners over the week.
Got it. Let's look at the weekly price movers. Biggest percentage gainers for the week ending May 26.
Top weekly gainers included Nairobi Business Ventures, up almost 11%. Brigham Holdings also gained over 10%. Unger Group and EGANS were both up nearly 10%, and Jubilee Holdings gained over 9%.
And the biggest weekly losers.
Home Africa had a rough week, down 17.5%. Kakuzi Plus wasn't far behind, down almost 17%. And Samir Africa, which was a top daily gainer, ended up being a top weekly loser, down over 15%. Stanbic and Uchumi also saw notable drops.
Interesting how Samir flipped like that. Shows the weekly trend can be quite different from a single day. Okay, let's zoom out even further. Year to date. Any standout performers so far this year?
Oh, absolutely. When you look YTD, you see some huge moves. Trans-Century Plus is the star, up an incredible nearly 218%. EA Cables has also had a massive run, up over 94% year to date.
Wow. And on the downside, YTD.
Every East Africa has struggled, down about 21.7%. Nation Media Group is also down over 20%. For those big names we keep mentioning, Safaricom is having a good year, up almost 17% YTD. Equity Group is basically flat, up just 0.3%, while KCB Group is slightly down, about 1.9% YTD.
Okay, let's switch gears from stocks now. What about the fixed income market? Bonds, T-bills, what's the story there?
Right, so in the secondary bond market, where investors trade existing bonds activity on that Friday, May 26, was actually down. Turnover decreased by over 28% compared to the previous day.
But for the week overall?
For the week overall, it was busier. Weekly turnover in the bond market actually increased by nearly 27%, hitting almost KES 56 billion.
So a slower end to the week, but a more active week overall for bond trading and the bond index.
That edged up slightly, both daily and weekly, so bond prices were generally firming up a bit.
Okay. What about Treasury bills, the short-term government borrowing?
The T-bill auction this week was still oversubscribed, meaning the government got more bids than the amount they were asking for. The subscription rate was 142.44%. Now, that's healthy, but it was actually down from the previous week's level.
Where did most of the demand go? Which T-bill maturity?
It was heavily skewed towards the longest paper, the 364-day T-bill. That one attracted bids worth over KES 18 billion.
And the yields. What happened to the interest rates investors received?
Well, for the shorter-term bills, the 91-day and 182-day, the yields dipped slightly by just a few basis points, tiny fractions of a percent. But the yield on the 364-day bill, that basically held steady day on day and ticked up just a tiny fraction week on week.
So the downward trend in T-bill yields seems to be slowing down, especially for that longer one-year paper.
That's what it looks like. The source suggests this is because investors are bidding a bit more aggressively, maybe anticipating that the government will need to borrow more domestically going forward. If government revenues fall short, they might lean more heavily on the local debt market, so investors are maybe expecting rates not to fall as much.
Makes sense. We also had a result from a reopened government bond auction, right?
Yes, the FXD 120-1220 reopening was very popular. They were aiming for KES 30 billion, got bids worth over KES 54 billion, so over 180% subscribed. The government accepted about KES 43.5 billion of those bids.
And the yield on that?
The weighted average rate of the accepted bids came in at 13.64%. That's compared to the bond's original coupon, which was 12%. So investors demanded a higher return this time around.
Okay. And internationally, how did Kenya's Eurobonds fare?
Yields on Kenya's Eurobonds ticked up slightly during the week by about 6 basis points on average. The source links this to renewed global uncertainty, particularly around President Trump hinting at potential tariffs on the EU again.
So global trade jitters impacting borrowing costs.
Seems so. It just shows how connected these things are.
Definitely. Which brings us nicely to the broader macroeconomic picture here in Kenya. Let's start with the shilling. How's it doing against the dollar?
It actually strengthened, but just barely, against the US dollar this past week, appreciated by about 0.034%, closing around 109.25. Year to date, it's also up by a similar tiny margin against the dollar.
Any reason for that slight strength? And is it expected to last?
Well, earlier strength was linked to easing global tensions, maybe, but the sources sound a note of caution. They mentioned potential near-term pressure if those EU trade talks break down, or if the U.S. actually imposes tariffs. Plus, there's talk of a possible U.S. tax on diaspora remittances, which could, potentially hit those crucial foreign currency inflows.
Okay, something to watch. What about the country's rainy day fund, the foreign exchange reserves?
Good news there. Official reserves held by the central bank increased quite nicely this week, up over 140 basis points to reach USD 10.3 billion.
And how much import cover does that provide?
That's enough to cover about 4.6 months of imports, which meets both the CVK's own statutory requirement and the East African Community benchmark. So that's a healthy buffer.
Good to hear. Now, fuel prices. EPRA made their announcement for the May-June period. What was the verdict?
Well, this is interesting. Even though the cost of importing fuel, the landing cost, actually decreased for petrol, diesel, and kerosene.
Prices at the pump didn't change.
Exactly. They remained unchanged. The reason given in the source is that the government significantly cut the fuel subsidies. The diesel subsidy was slashed from over 6 shillings per liter down to just 28 cents. The petrol subsidy was also reduced quite a bit.
So the lower import cost was basically eaten up by the reduced subsidy.
Pretty much. And looking ahead, while global oil prices might suggest landing costs could fall further, the source warns that there's an expected review of the margins for oil marketing companies. That review could potentially add several shillings per liter back onto the pump price, so consumers might not see the full benefit of falling global prices.
Right. Always something else in the mix. Okay, finally, on the macro side, what's the situation with liquidity in money markets? Enough cash flowing around?
It seems so. Liquidity continues to ease. We see that in the average interbank rate, the rate banks lend to each other overnight, which dipped slightly again this week to 9.83%. The source suggests there isn't much upward pressure expected on that rate soon, indicating the banking system is pretty liquid right now.
Okay, that covers the Kenyan picture. But we know global factors are huge influencers. Let's broaden the view for a moment. What's the global outlook?
Well, global growth forecasts have actually been trimmed back a bit. The projection for 2025 is now down to 2.8%, revised from 3.3%, largely because of these renewed tariff threats and the uncertainty they create.
It does feel like we're back to worrying about trade wars again.
It does seem that way. President Trump's hints about potential tariffs on Europe are definitely casting a shadow. Plus, you've got growing concerns about the fiscal situations in the U.S. and Japan, which are also expected to put a damper on global growth.
How did the major stock markets around the world react this past week?
It was pretty volatile. If you look across the major global indices, the median change was a decline of about 1.1% for the week. A lot of this seems linked to worries about the U.S. budget deficit, especially after that big, beautiful bill passed the House. That's layered on top of the Moody's downgrade concern.
So, mostly down then?
Mostly. The S&P 500 and Dow Jones were both down over 2.5%. Some markets like the Hang Seng in Hong Kong and the FTSE 100 in London managed small gains, but the overall trend was negative.
Okay. And oil prices. We touched on landing costs, but what did global benchmarks do?
They actually fell this week. UAE Murban, which is relevant for us, dropped about 1.3% to around $64 a barrel. Brent crude was also down. The sources suggest this might be due to OPEC plus signaling a potential increase in production soon, which is currently overshadowing geopolitical risks.
Interesting. And currencies globally, how did the U.S. dollar fare?
The dollar actually weakened a bit against several majors, the Aussie dollar, the British pound, the euro. It did strengthen against the yen, though. This weakening is being linked back to those U.S. fiscal concerns we mentioned, the budget bill, the Moody's downgrade pressure.
Right. And lastly, on the global front, government bond yields in major economies, those benchmark 10-year yields.
They faced renewed upward pressure, pretty much across the board, U.S., U.K., Germany, Japan. Investors seem to be demanding higher compensation, higher yields because of all this increased uncertainty. The potential U.S. tariffs, surprisingly high U.K. inflation data, And those fiscal worries in the U.S. and Japan all contribute.
Okay, that global context is really important, thanks. Now, let's bring it back home and look at some specific Kenyan business news highlights that caught our eye in the sources.
Yeah, first up, a really big one potentially, the Safaricom privatization plan. It looks like the Treasury is aiming to sell off a portion of the government's stake in Safaricom before June next year.
And this is tied to raising significant funds, right?
Exactly. They have a $149 billion privatization target, and the Treasury CS reportedly sees Safaricom as the main big-ticket asset they can use to hit that target. The government currently holds just under 35%, remember.
That's a valuable stake. Is
Yeah.
there interest from buyers?
Apparently so. The source mentions global private equity firms are quite interested. Telecoms are attractive to PE because they tend to have pretty predictable revenues and cash flows, which makes them easier to finance deals for, often using debt.
Definitely one to watch. Okay, moving on, there was an update in that legal tussle between Equity Bank and EA Cables.
Yes. The Court of Appeal ruled on EA Cable's attempt to stop Equity Bank from selling some of its properties to recover a debt of about $2.2 billion. The court basically said no, Equity can proceed for now.
What was the court's reasoning?
They essentially said that Equity Bank is financially strong enough to pay damages later if EA Cables eventually wins its full appeal. So stopping the sale now wasn't deemed necessary. Remember, Equity put both EA Cables and TransCentury into receivership over debt issues.
Right. Now, this next one sounds quite futuristic for the NSE crypto derivatives.
Yeah, this is fascinating. A Canadian company, Valor Inc., has formally applied to the Capital Markets Authority, the CMA, to list derivatives linked to crypto assets like Bitcoin and Ethereum right here on the Nairobi Securities Exchange.
So investors wouldn't buy Bitcoin directly, but something traded on the exchange.
Exactly. They'd buy what are called exchange-traded products, or ETPs, similar to ETFs. These ETPs would track the price of the underlying crypto assets, allowing investors to get exposure through a familiar, regulated exchange environment. Valor is apparently hoping to get this done possibly as early as August, if they get CMA approval.
That could be a game changer, offering regulated access to crypto.
Okay, what about the government's pending bills situation? Any progress reported?
Some progress, yes. The total stock of national government pending bills reportedly fell by about $118 billion in the first quarter of the year, dropped from roughly $540 billion down to $421 billion by March.
So payments are being made.
It seems so. Ministries have apparently been given the green light to pay bills that have been approved. There's also a specific plan for road sector arrears, about $80 billion, which are set to be paid using a bond issued by the Kenya Roads Board. A special committee has been verifying claims and has certified about $229 billion as payable. So the pile is shrinking, but still substantial. Okay, good to see some movement there. And finally, bank profitability. What's happening with their lending margins?
Banks' interest spread. That's the difference between their average lending rate and their average deposit rate actually narrowed in March. It fell to 6.44%, down from an 8-year high of 6.81% back in November.
And why the squeeze on margins?
Well, it seems to follow the drop in average lending rates, which came down to about 15.8%. The sources connect this to the central bank cutting its policy rate earlier, and also, perhaps, some pressure on banks regarding high loan costs. Deposit rates also fell, but lending rates fell a bit more, hence the narrower spread.
Okay, wow. We have covered a lot of ground today. From the minute-by-minute market ticks to the big-picture macro trends, global wins, and specific company news.
Yeah, and when you put all these pieces together, you really start to see how interconnected everything is, don't you?
Yeah.
The daily market jitters reflect those broader economic conditions, which are themselves shaped by local policy decisions and what's happening globally.
Absolutely. And things like foreign flows tell you about specific sector sentiment, like maybe what investors are thinking about banks ahead of earnings season.
And then you layer on the macro stuff, the shilling's stability, the reserve levels, but also the fuel price reality and those global risks. It all feeds into business costs and investor decisions.
Plus those news stories, privatization plans, debt resolutions, new potential asset classes like crypto derivatives, pending bills progress, bank margin shifting, they all give clues about where things might be heading, both for the market and regulation.
It really gives you, the listener, a much deeper sense of the dynamics playing out in the Kenyan market right now.
So, pulling it all together, maybe the key question emerging from these sources is this.
Hmm.
We see domestic investors driving a lot of the recent activity, while global uncertainties are definitely still lingering. How is that balance between local mood and foreign money going to shape the market, the main indices, and individual stocks in the weeks ahead?
That's definitely something to keep an eye on. It's
Yeah.
been a really comprehensive deep dive today.
It has. We hope you found it valuable and feel more informed about the Kenyan financial and business landscape.
Absolutely. And if you did find this useful, please do subscribe to the deep dive wherever you get your podcasts. It really helps others find the show.
And check out our social media channels too. All the links are right there in the podcast description. Thanks for joining us, and we'll catch you on the next deep dive.